Well, I guess Javier is ready now to talk to us. Javier, hello. So sorry about the failure in audio. Well, we were talking about the ECB's Draghi, which of course vowed to defy critics with inflation pledge. How are investors chewing that piece of information?
Yeah, well, I was telling you that, of course, this is not the first time that Mario Draghi has had to hear some criticisms about his monetary policy, because here's the problem. Mario Draghi has said one time and again that he is ready to intervene in the economy in case it is necessary in order to achieve that inflation rate, which we are very far away from. The target is 2%, and the inflation rate is not even close. It is not even close to 1%. So, of course, there is still a lot to do, and the problem is that those measures that the ECB has been taking are simply not yielding the desired results. But the critics say that the most worrying part of all of this is that the ECB is using all of these instruments now where the economy in the Eurozone is more or less stable. These instruments are supposed to be used in a situation of crisis. So the problem is, what happens if we actually do get a financial crisis in the world? What is the ECB going to work with then? And that is the big problem that Mario Draghi is confronted with. Of course, he says that doing nothing would be even worse. And of course, investors do want to see action by the ECB, especially nowadays where, as we know, the markets have had a very bad start to the year.
Now, Volkswagen is still in the news. The company's trouble are yet to be over. Its second biggest shareholder has given the company 3 months to provide a full account of the root cause of the diesel emission scandal. How is this playing out in the market?
Well, you know, investors are definitely used to bad news coming from Volkswagen. Now, this sort of ultimatum would be a positive sign, I would say, because everyone wants answers from Volkswagen. No one is getting them, not even the authorities that are in charge of the case. But remember that this is a very sensitive case, especially for Volkswagen's management, because a scandal of these proportions, where we know that there was an intentional action to cover up the emissions of the cars, is something that cannot really happen without anyone knowing about it. And that is the big question, because either way, the management is going to have trouble. If the investigations find out that the management was not informed, then you could say, how could they not know? And if the investigations turn out to give the information that the management was informed, then you could say, how could you know and not do anything about it? And that is why these are so sensitive informations that Volkswagen is possibly trying to delay as much as possible. We will see if that 3-month time frame is enough, but the truth is that the shareholders are, of course, not the only ones who are making pressure to have transparency in this terrible case.
Another stock on the lookout is Deutsche Bank. Its CEO will on Thursday explain how the lender recorded its first full-year loss since 2008. How much of investors' confidence has been eroded with this kind of result?
Well, the investor confidence has been severely hit by this, indeed, because not only is it bad news from the financial perspective, but it also, of course, somehow makes you think about the development and about the performance of Deutsche Bank's new CEO, who, as we know, is being known or is known in the financial world for someone who has yielded very good results, at least at his time, in another very important bank, which is UBS. Now, the problem here is that the excuse of legal costs, which up until the last reports was always the excuse for the bank making losses, doesn't work anymore. And this shows us that there are very, very deep structural problems at Deutsche Bank, and it is very difficult or increasingly difficult to justify them. Now, of course, you have to give John Cryan a little bit of time in order to complete his restructuring of the institution, but we don't really know if this is going to work given the severity of the problems, and that is something that has definitely sent the shares down, and we will see if that press conference somehow relieves the concerns that investors have.
Javier, thank you for your time. Javier Arguedas, DWTV Channels TV correspondent, reporting from the Frankfurt Stock Exchange. We'll take a quick break, and when we come back, Business Incorporated continues. To stay with us. Welcome back. Well, pressure continues to build on the Tunisian government as unemployed gathered in town of Kasserine looking to obtain documents required to make job application, and as dozens of unemployed people queued outside the municipality building in the Tunisian town of Kasserine waiting for job applications documents. A group of unemployed graduates held a sit-in on Monday to request more job openings and regional development.
The unemployment rate in the impoverished area of Kasserine is at 26%, despite the national average in Tunisia of 15.3%. The situation in Kasserine is the latest challenge to Prime Minister Habib Essid's government after a week of protest and riot over jobs. Job seekers also staged a fresh protest in the central town of Sidi Bouzid, cradle of the Arab Spring uprisings, and were dispersed by police using tear gas. Similar protests were held in the southern city of Gafsa and the northern town of Beja. There were angry scenes as unemployed people gathered next to the municipality building in Kasserine in order to get administrative documents they need to make a job application.
There is no job, no factories, no development, and we couldn't even get a piece of paper to apply for jobs. We are here for just a piece of paper that we need, and they didn't give it to us. How would they give us jobs? They keep promising us, but there is nothing. Every day they tell us tomorrow, next year, or later. We did a revolution in order to get freedom to work, to have a future, and to improve our social situation. But it's the opposite. We are regressing. There is nothing, and the promises are just on paper. The investments are taken by the 24 other countries, and we are the last one to get investment, and we have nothing.
Demonstrations began in Kasserine on Tuesday, January the 19th, and spread across the country, leading to violent protests and riots, the most serious since the 2011 uprising that toppled autocrat Zain El Abidine Ben Ali. Prime Minister Habib Essid said on Saturday, January the 23rd, that he understood the demands of young Tunisians, but that it would take time to respond to young people's economic demands. Unemployment stood at 15.3% in 2015, up from 12% in 2010 due to weak growth and lower investment.
Well, the volatility in the oil market has continued as price dropped to $30 a barrel today, trading within sight of a 12-year low on concerns about excess supply and more signs of a Chinese economic slowdown. Now, an official in Kuwait downplayed the prospect of an emergency OPEC meeting and predicted 2016 will be tough, with prices remaining low, underlining the slim chance of any deal among exporters to tackle excess supply. Adim Okwesa from Financial Derivatives Company joins me now to talk about this on the commodity segment. Hello, Adim.
Hello. Thank you for having me.
Right, there seemed to be no end in sight for current oil price drop. Today, Kuwait has downplayed the prospect of an emergency OPEC meeting. And on the front page of one of the newspapers today, it says Nigeria and Iran clash over OPEC emergency meeting. How important is this OPEC emergency meeting for the oil market at this time?
Yes, you have to understand that first. It's all about battle for market share. OPEC can't reduce the meeting. The underlying what they want to achieve by the meeting is to come to a conclusion to reduce production in order to stabilize the market. And you have to understand that OPEC can't reduce production alone. With that, when the likes of Russia and US will continue raising their production, if OPEC reduces their market share, if OPEC reduces their production, their market share will be lost. So unless there's cooperation with all sides, OPEC producers and non-OPEC producers, I don't see any emergency meeting happen. And even if there's an emergency meeting and there's no concrete outcome to cooperate, the effects will be bad for the market. So I believe we're better if no emergency meeting happens.
All right, so what are, aside from this Kuwait statement, what other factors are driving the oil market at this time?
Well, the major factor is a stronger US dollar. The US dollar has appreciated by almost 22% this year, while all the major currencies, the euro, yen, and we all know what what's happening with the Chinese yuan, those currencies are continuing weakening. So the most important factor is the stronger dollar. And we saw last year, Goldman Sachs predicted oil prices falling below $20. The reason why they made that statement is because of the impact of a stronger US dollar. If the dollar continues to appreciate, it would have a downside impact on oil prices.
Right.
Yeah, so
Saudi,
that's a major factor.
oh, okay. Saudi Aramco, the world's biggest oil producer, has just announced it may open IPO to international investors, and the company is maintaining its investment in oil and natural gas projects despite the low oil price. What does this mean for the oil market?
Well, that's just a signal to you that Saudi Arabia is preparing for a longer period of low oil prices. And I might be cynical, but in my opinion, I feel that Saudi will become Aramco if they use capital injection. But I feel that apart from capital injection alone, there's also another side that we don't know about, the political aspect. Because by doing so, if Aramco enter the capital market, it will deny the likes of Iran and US shale producers access to credit. So it's also politically motivated. So we have to look at that aspect too.
All right. Thank you very much, Adim. Thank you for your time.
Thank you very much.
Right. Let's look at the global oil prices, of which are, of course, expected to remain low in the near future, according to analysts, even though the price has lately climbed to about $30 a barrel. Now, on Monday, the West Texas Intermediate for March delivery moved down $1.85 to settle at $30.34 a barrel on the New York Mercantile Exchange, while Brent crude for March delivery decreased $1.68 to close at $30.5 a barrel on the London ICE Futures Exchange.
Crude oil prices began to recover when the United States faced a patch of extreme cold weather last week, while Europe raised hopes of more economic stimulus measures. However, the global oil price has fallen by more than a quarter since the start of this year. Iran announced last week that it would increase production since US and EU sanctions have now been lifted. In reaction to this news, benchmark Brent crude dipped below $28 a barrel, hitting its lowest level since 2003. Analysts said the current oil prices can't be seen as the start of any long-term rebound.
The crude oil price depends on three major factors: supply, demand, and the US dollar. The supply part is very messy, as both Iran and Saudi Arabia announced they would increase their outputs. However, the demand remains rather weak because the US dollar has been in a hiking cycle, with more rate hikes very likely to be seen this year. For all these reasons, the oil price will stay low.
Mr. Kaugin estimated the price of oil would see fluctuations of between $25 and $40 a barrel throughout 2016. Though the Middle East is ramping up its production levels, China National Offshore Oil Corporation, one of China's major oil producers, says that it will cut its oil and gas production by between 10 and 25 million barrels this year. It's the first time since 1999 that the leading Chinese oil company has announced such a reduction.
The CNOOC mainly exploits undersea oil and gas, so its cost per barrel is higher than those oil companies that produce oil onshore. The company bought Canadian oil company Nexon 2 years ago at a cost of more than $10 billion. However, the oil price began to plummet soon after the deal was done, and there's no sign of recovery in short and mid-term. Nexon's recent scandals involving explosions, leakages, and pollutions have also troubled the CNOOC.
The analyst also feels China's other top two oil producers, Sinopec and PetroChina, were unlikely to cut their outputs this year, as both have sufficient oil resources and enjoy favorable policies from the government. Rather, he predicted that PetroChina might in fact increase production to ensure the country doesn't depend too heavily on foreign imports.
And that's it on the program. Thank you for watching.